At Octopus, we run a range of mandates that invest in UK smaller companies. And what makes us slightly different is the fact that we focus on the very smallest companies on the AIM market, as well as the larger, more mature, established businesses. We run venture capital trusts, which are required to invest in sub-30, sub-20 million pound companies. And it's the knowledge of that end of the market is the reason we launched the Microcap Growth Fund. Our general investment approach is to become long-term co-owners in businesses. That's what we strongly believe creates the shareholder value over the longer term. So we're very patient investors. What we'd love to do is find small businesses at quite an early stage in their evolution and back them for 10, 15, 20 years. And watch them blossom into quite substantial, successful global companies. That's ideally what we're looking to achieve. So with the Microcap Fund, we're looking to find businesses when they're certainly sub 100 million in size, but to look for companies that are operating in high growth markets that have these businesses should have a niche or proprietary product or service, which is going to be relevant on a global scale. So they've got the potential to become potentially £1 billion+ businesses. A good example would be GB Group, which is an ID verification software business. We first invested in GB Group back in 2010 when it had profits of circa £1 million and a market cap of around £20 million. It's grown very successfully both organically and via strategic acquisitions, growing very quickly internationally at the moment, and today expected to achieve profits in excess of £40 million and has a market cap of circa £1 billion today. So it's been a great investment within the portfolio, but we're as excited today about the future prospects as we've ever been, and we really believe the company can go on and double in size again from where it is, hence it remains a top 5 holding in the portfolio. Another good example would be Restore PLC, which is a document storage business. So not the most exciting underlying business activity, however it does emphasise how companies with an AIM listing and access to capital can really create significant shareholder value. We backed Restore at 26p a share, sub £20 million business at that stage when it had one storage unit. They've successfully raised money and completed acquisitions and eventually sold out at over £6 a share. So that's been the most successful investment the fund has had over the last 5 years or so. We usually know after the event, but actually, I mean, the most important foundation for any investment is the management team. And what we want to do is get a strong sense from the management team that they have a real strategy for growth going forward, a real understanding of their marketplace and an understanding how they can create value from the business that they run today. That's absolutely crucial. I mentioned earlier we like businesses with a niche or proprietary product or service. We like companies to be very relevant in their marketplace, not just in the UK, but in the obviously much bigger overseas market as well. That's very important to us. And progressive businesses, companies that are thinking progressively about the future, about future generations, and as I say, are going to be just as relevant, if not more relevant, in 5-10 years' time than they are right now. They can, in the short term, be more volatile than larger companies. Stock markets can be more inefficient at that end of the market during periods of uncertainty. The way we mitigate against that is by having a well-diversified portfolio, is the first point, but also it's around investment time horizon. What we want to ensure is that investors come in expecting to be there for the longer term, as we know that over the longer term, smaller companies do outperform larger companies, and so that's the best way to mitigate any short-term volatility.